Our next guest says the recent relief rally has some legs. Joining us right now for what she's seeing in the charts is Katie Stockton. She's the founder and managing partner at Fairlead Strategies and now a CNBC contributor. And Katie, first of all, welcome. We're great to have you here as a contributor. Good news for us.
Thanks so much, Becky.
Second of all, good welcome news to a lot of people if you think this relief rally really does have legs. What are you reading?
Yeah, I think so. I mean, it definitely has the support of positive short-term momentum. And for that, we have an indicator that we watch very, very closely. And we're putting a lot of weight on that indicator right now. As soon as it rolls over, we'd be quick to reduce any counter trend positions. So we're keeping that on our side. And for now, it does point higher. Even if we see volatility today on the back of the Fed meeting, we don't expect it to impact this one indicator in particular. We've already seen a nice little breakout above the 50-day moving average by the S&P 500, and 39.14 resistance, which is what we've been watching, does look surmountable, and that will turn our attention to the 200-day moving average, which of course repelled the relief rally over the summer. So we're looking for perhaps a retest of the 200-day moving average, but really adhering to that short-term momentum indicator to help us know when we need to start managing risk again.
What are the two paths? If it breaks through 39.14, if it doesn't manage to do that, what's the next reaction for the market?
Yeah, well, listen, the initial support is still around that 35.05 level that was tested successfully at the end of September. That's an important level, but not as important as 3,200, which was targeted from a previous breakdown. So we still think that we'll see 3,200 before this bear market cycle culminates, and that's based on a previous breakdown. But in the interim, we do think that we could see even several weeks out of this relief rally, and we say that not just because of that short-term momentum, but also because we have some positive seasonal influences, an election, and just the time of year where I doubt we're going to get that volatility spike before year end. But unfortunately, the analog to 2008, according to the VIX, is still holding true, meaning that we could see on the back of this relief rally a pretty decent move in volatility.
When do you think that would pick up if volatility does spike further?
Yeah, there's no way of knowing, but I would say it would be natural maybe at the start of the new year. So we'll be watching, again, those short-term momentum gauges to help us sort of trigger that volatility event. And we'll be positioned, very much risk off when that happens. For now, I feel like we have a bit of a gift from the market, good breath behind this relief rally, a selling opportunity for stocks that have broken down, of which there are many.
One of the things we were kind of watching in the month of October was thinking it could be a spooky, scary month. Just historically, you see bad things happen in the month of October. That was not the case. The Dow actually put in its best performance, up 14%, best performance since January of 1976. What were you watching for in October? Was there a point where you said, okay, this is really good and it's not coming back?
Yeah, well, we were looking for some kind of low, not a major low, but a minor low, which is what we have now. And even though October does have a bad reputation, just like September, it also tends to be what they call a bear killer. We don't think it's killed the bear entirely, but at least temporarily in here. So, the old adage, sell in May and go away, it actually would suggest that you come back in October. So off of an October low, you tend to get decent follow through in Q4. So October, we're glad it's over with all that volatility, and we hope to see less volatility, of course, coming into the year-end positioning.
Of course, all bets could be off with the Fed decision today. I think the markets are kind of anticipating some sort of signal that the Fed is going to be done with 75 basis point hikes, or that they're not long for this world with those sort of hikes. What would you see that would kind of change your mind entirely? I know you're planning on some volatility coming up, but what would make you say, uh-oh, you really got to rethink this?
Yeah, so it's that one trusty short-term momentum gauge. If we see enough of a reaction that it leads to a downturn, for those of you that are chartists, it's the daily MACD indicator. As soon as that flashes a sell signal, that to us would be a risk metric. So if it's a big enough, sort of volatility event that it does lead to that kind of sell signal, we'd certainly respect that. But for now, we're just looking for the mega caps to start to come back into those gaps down in response to earnings. And we do feel that overall earnings have been generally well received, except for those high profile gaps down. So we think this is a market that is somewhat hungry for good news, or they might read some bad news and find a shred of good news in it, and therein it elicit a positive reaction.